Hey guys, so it's Gold Streams here again. Talk about a trade that I took on the 11th, right, of February, so Tuesday the 11th of February. As you can see, we had our resistance marked out, right, and we had our supports marked out there. There's me just measuring zones. I moved the zone where I expected price to end up going to the top side, at the top of the resistance. And then this candle, the previous candle, so not the candle that's open at the moment, closed above resistance, but I didn't enter a trade. Now, there's two reasons why I didn't enter a trade. I couldn't enter a trade on candle open because the stop loss was like 45 pips at that point. So it's too big of a stop loss to enter a trade. The other reason is if you can look to the left hand side now where the candle currently is, right? That wick on the left hand side is actually resistance on the 15-minute time frame. Now, I know some traders that took an entry literally right here. In my opinion, again, each to their own style. In my opinion, that's a FOMO entry. That's fear of missing out, right? What I was waiting for when this candle opened up, I want to see one of two things. I want to see the candle make a bottom wick first and then flip bullish, right? And break the high. If it doesn't make a bottom wick, I don't want to see it break the previous candle high within the first like couple of minutes. If that happens, then as you can see in this particular example, I don't trade. I don't take the trade. I don't see a possible entry. I'm not going to take a trade and have a stop loss below the previous 30-minute candle. Doesn't make sense for me. The 15-minute candle, so the previous 15-minute candle was like a doji candle. You could have had a stop loss on the 15-minute time frame. But again, ideally what I wanted to see is I wanted to see this candle wick down first and then start moving up. So this candle, as you know now, this is the first candle of pre-London, right? So this is the 4-hour candle. This is a new 4-hour candle opening up. Not very often that you see a 4-hour candle move bullish without making a lower wick, right? If you go through the charts now, you go through the charts and you have a look at the candles, you're not going to see a lot of 4-hour candles without wicks. Okay, so in that case, I wasn't interested in the trade. While this candle was forming, the only thing that I was keeping in mind, I was like, you know what, this is like 110, 115 pip range to the top side. What I'm going to do is I'll let this candle finish forming. I'll wait for the market to create support, maybe on a lower time frame, like the 15-minute time frame. Create support, and then I can take buys for continuation to the top side. At the same time, as this candle was sort of rejecting the top side, so it moved up about 60 pips. Really healthy trade. Well done if you caught it. But it moved up about 60 pips. What I wasn't expecting is I wasn't expecting this candle to come down and break its own low, right? If this candle does come down and break its own low, what I'm keeping in mind is that I want to see a fake out scenario on the 15-minute time frame. So a fake out scenario simply means a bullish candle closing outside the zone, and then a bearish candle coming in and closing back in the zone, right? The zone being in between the support and the resistance that we have marked out on the screen. So pretty much that's what we're looking for. Waiting for support to be formed now on a smaller time frame. I like the fact that the 15-minute candle is coming down at this point, right? It's heading down. It means it's retesting that zone. It's a good sign. But at the same time, if this candle flips bearish, that means the 4-hour candle is flipping bearish. That means the 1-hour candle is flipping bearish. And obviously the 30-minute candle is flipping bearish as well, right? Which means the 15-minute candle has created a fake out. So I've got two scenarios that I'm waiting to play out. The tradable zones in this particular instance were above resistance, like I mentioned, like 115 pips. The consolidation zone was 50 pips, right? It was like 55 pips in consolidation. So if this 30-minute candle closed sort of with a small body back in the zone, which it's doing now, then it's a perfect entry to take the trade and ride it down to the downside. Now, one thing that I've seen is in fake out scenarios, whether you have a bearish fake out or a bullish fake out, once the fake out does actually play out, you have to be very patient. You can't pre-predict a fake out. You have to wait for it to actually happen. You have to wait for candles to close. But once candles do close and the fake out is scenario has played out, the strongest confirmation for fake outs are on 30-minute time frames, right? It will 90% of the time fill the whole range, right? So if we've got a fake out in this particular case, back in the range here on the 15-minute time frame, I'm expecting price to come down all the way back down to support, right? And fill this whole range, right? So the 55 pips. But anyway, so this 30-minute candle is about to close. As you can see, patience is key, right? So if you don't see something that you want to see, you don't have to trade, okay? So me seeing this candle break the high without making a bottom wick first, it's not comfortable for me to trade. I didn't trade it, right? I just sat there and I watched it. Nobody's going to take the charts away from you guys. You have to understand this, right? The charts are going to be there tomorrow. Charts are going to be there the next day, okay? The charts are always there, okay? If you don't take a trade because you don't feel comfortable with what you're seeing on the chart at the moment, you can always come back later. You can always come back tomorrow and find the trade, right? Just because you've shown up to the charts and you're looking at the chart, it doesn't mean you have to trade. You have to get comfortable with watching price move and you not clicking any buttons, right? I think that's a big problem for most traders, for most unprofitable traders, is they're not comfortable watching price move. They can't just watch it move and without being involved. They feel like they're missing out too much. But as you can see, back to the actual trade here, we got a bearish close, right? We're waiting for the candle to finish making a top wick, which it did. It came down, it started breaking its own low. The trade was entered. You can see the stop loss being above this current candle wick, because if this candle broke its own low, it's finished making a high. I'm not interested, right? The trade is going to be invalid. I'm not going to have my stop loss all the way at the top of the previous candle. Now that the candle is about to break the low on the left side, the previous candle, if this candle was to come back up and test its open price, I would close 50% of my trade. If this candle was to go back and flip bullish, I would close 50% of my trade after the previous candle low was broken, right? Because that's not how you expect price to move, right? I'm fine with drawdown, but once a candle low is broken, you don't expect the candle to retrace and test its open price again. I hope you guys understood that idea. As the price is moving, keep a close eye. We get to about 15, 16 pips, if I'm not mistaken. We get to about 15, 16 pips. Then what we do, we put the stop loss at break even and we let the trade ride. We secured partials at around 17, 18 pips, right? And then let the trade ride all the way down to take profit, which was, I think, 49 pips on this one. But yeah, thank you guys very much for watching. Hope you understood why we took this trade, right? And why we didn't take the buys. And obviously, for any questions, make sure you feel free to actually follow us on Instagram, right? Gold Streams. Write me a DM if you've got any questions. And like always, guys, don't forget to like and subscribe to the videos. Thank you. Look forward to doing the next one.